In this presentation, we will take a look at the question of, does not-for-profit mean that money doesn't matter for a not-for-profit type organization? This can seem like a silly question, especially when we're talking about the accounting for a not-for-profit organization, but terms like not-for-profit can be taken out of context and can be a little bit confusing when we compare and contrast them to for-profit types of organizations. So the answer to the question, does not-for-profit mean that money doesn't matter to a not-for-profit organization, I'm going to say is no. And then we might ask, well, why does money matter if the objective of a not-for-profit organization is theoretically not-for-profit? And the reason money matters, whether it be for-profit or not-for-profit, is because that's going to be our major measuring tool. That's what we're doing within the accounting department. We're trying to measure the performance, how well whatever the objective of the organization is, they are doing within it. The dollar is going to be our measuring tool. It's going to be our ruler in order to do that. To look at the similarities and the differences, let's consider the accounting equation. When we think of the accounting equation, we think about assets, liabilities, and equity. For a for-profit organization, we typically see the assets, that's what the company has, minus the liabilities, what the company owes. That's going to be loans, accounts payable, other types of notes payable. And then we have the equity, and this is the value of the organization. And of course, the organization is owned by the owners, and therefore this would be the net value to the owners of the organization. So the owners then have an objective to regulate how the assets are used, how the liabilities are leveraged in order to hopefully increase the value or equity of the organization. The double entry accounting system for a not-for-profit organization or governmental organization will be much the same in that we'll still have assets, we'll still have liabilities, obligations, and the difference between the two we're going to call something like net position, but in essence we have the same thing as equity. The difference between the two is that the equity represents typically the value to the owner, whereas the net position, because we don't have a particular owner that can claim value of the net position is the net worth, the assets over the liabilities that can be used in the future in order to achieve whatever the objective of the organization is. That could be a charitable type of organization or whatever the services that need to be rendered from the governmental type of organization. Therefore, the measuring of these resources are going to be measured in terms of dollars. We're going to use dollars to measure assets, liabilities, and the net value of the organization. The for-profit organization is going to be heavily regulated by the market, by the owner of the company. And if it's a publicly traded company, we're talking about stockholders of the organization. And if we're talking about a governmental or not-for-profit organization, we still need to measure this stuff and even be more transparent with the information. The money matters more, or the measurement matters more in some ways. We want to make it as transparent as possible because we don't have these owners that are going to be as vigilant in taking a look at the measuring tools, the objectives being achieved within the organization through that profit objective. Over here, we don't have the profit objective, and therefore the people that are donating to the organization aren't going to be the people that are benefiting from the net position, or at least not directly. So in other words, the people that are donating to a charity or the people paying taxes may get benefits from the charity or from the services that a government organization might provide, but they're not getting the direct benefit that's in proportion to what they're giving in terms of the taxes or the donation as they would expect to have with regards to a for-profit organization. Therefore, the money, in terms of measuring with the money, it's often more important to be really transparent as possible, given the fact that we have less market pressure to make sure that that money is being managed as well as possible. Another way to consider this is with the income statement type accounts, where we have revenue minus expenses giving us in a for-profit net income. So when we think about a for-profit type of organization in terms of performance, how are they doing? We think about the income statement. We think about how much revenue they are generating, how much expenses they had to take in order to generate that revenue. And then the net income is what increases the value, the equity of the organization. And that would be something that the owner would be very concerned with, the stockholders in a publicly traded company, because that's going to increase the value directly relational to the owners. In a governmental or not-for-profit organization, we still have revenue, but the revenue is going to be from donors or taxpayers or something like that. we still have expenses, but note that for a for-profit organization, we can basically think of those expenses as something that we needed to consume in order to achieve the goal of revenue generation. When we think about the expenses for a not-for-profit organization, it may not have as much of a link that the expenses are going to be related to the generation of revenue as they would be for the goal of the organization to achieve whatever social objective of the organization. But however, the difference between revenue and expenses will still give us the revenue over the expenses, in essence, the same type of net income type of calculation. And those resources, the revenue over the expenses, would be something that we can then increase, what would be similar to the equity section or the assets minus the liability, what we can then use in order to achieve the goals and objectives of the organization. So it's still going to be necessary for us, of course, probably even more necessary for us to concentrate more and be more transparent once again in terms of what the revenues are, what the expenses are, how we're expending this money. The fact that the expenses are not tied to simply the goal of revenue generation makes it a little bit more difficult for us to determine whether or not those expenses are going to be worthwhile for us to be expending in, as opposed to for a for-profit organization, the expenses are geared towards the generation of revenue. We have a specific goal, specific objective, and we have owners that are really vigilant in terms of whether or not these expenses are achieving that objective of revenue generation. Over here, we're saying we have expenses that may not be tied directly to the revenue generation, so we have to be more transparent to be able to see where these expenses are going so that we can better make decisions about it. So obviously measuring these items is very important. Also note that when we think about these expense items, we can also consider who is benefiting from the revenue and the money that's going through these types of organizations. Clearly, when we think of a for-profit organization, we consider the revenue minus the expenditures, that going in essence to the owner, or the owner's value then increasing. So we could see directly that the bottom line of the income statement is benefiting the owner. When we consider the organization in terms of a not-for-profit or a governmental organization, we see the bottom line as basically increasing the value to the organization, but it's not being applied directly to a specific type of owner. However, we also have within both of these types of organizations included in these expenses things such as wages. So when we consider the money that's being used, we have to consider the expenses, the value of these expenses, and make sure that those are going to be valued well, because with whatever organization we're thinking about, those expenses are going to be regulated on the for-profit side by market pressure to see if they're justified in order to generate revenue. The expenses with a governmental or not-profit organization don't have the same type of market pressure, so determining what these expenses should be can be a little bit more difficult, and of course included in those expenses are wages. So a substantial amount of people, of course, make their money from or earn a living through working for not-for-profit and governmental organizations, and we need to be able to measure and make sure we're as transparent as possible to decide the proper types of expenses and how they're being expensed. And so these are types of people that, of course, are going to be concerned with the allocation of resources, because to the governmental organization, it's expenses to the organizations, but to these individuals, to the workers of the organization, it is revenue to them. So we want to make sure that, of course, the calculation of that revenue, the application of the revenue is indeed important.